single time you buy something or you're paid by your employer, a big chunk of the money will go to the taxman. Big corporations around the world pay millions every year in taxes, and so it doesn't come as a surprise that some people find ways of not paying it. In today's video, we will be taking a look at the difference between tax avoidance and tax evasion. Hello and welcome to another KYC Lookup video where we bring you AML related content to help you enhance your knowledge in the fight against money laundering. Before diving into today's video, be sure to subscribe so you don't miss out on any future videos. Oh, and don't forget to leave us a comment with any suggested topics you would like us to cover in the future. Okay, so first of all, why do we pay taxes? As begrudging as it may seem, we all need to pay taxes as it goes towards building our infrastructure, supporting our emergency services, as well as supporting our local libraries and parks, education, the welfare system, as well as housing. If you're in the UK, it also goes towards the NHS, which is also known as the National Health Service. It basically goes to all the things that are important to keep society going. However, over the years there has been some big stories of high-profile people trying to avoid doing this. Before diving into some of those stories, let's discuss the difference between tax avoidance and tax evasion. What is tax avoidance? In technical terms, tax avoidance means legally reducing your taxable income. For example, claiming allowed tax deductions and tax credits are common tactics, as it's invested in tax-advantaged accounts such as IRAs, individual retirement accounts, and if you're in the US, 401ks. In simple terms, you are structuring your affairs so that you pay the least amount of tax due. So even though it is not illegal, it may be seen as immoral, as you are not paying your fair share. In a recent US report, it states that Americans deducted over $200 billion of charitable contributions a year on their tax returns, according to the IRS data. Most of these contributions were in cash, but tax professionals say you don't have to give dollars to give a big deduction. Donating household goods, food, clothing, and other items can put a big dent in your tax bill too. Examples of tax avoidance could be donating to charitable organisations, investing in your retirement funds like IRAs or 401ks, communicating with a tax advisor on how to minimise your tax bill legally, and investing in tax relief companies. So what is tax evasion? Tax evasion is the use of illegal methods of concealing income or information from the IRS or other tax authorities. Tax evasion can result in fines, penalties, and/or prison time. In basic terms, tax evasion is lying on your income tax form or any other form which makes it seem your income is a lot less than it actually is. Tax evasion has moved on considerably and is no longer conducted down dark alleys with bags full of cash or fists full of dollars slipped quietly under the table and has become more sophisticated. For example, tax evasion could be conducted by banking in on cryptocurrencies and not declaring them. The IRS have rules in place about declaring these types of currencies, as they are taxable, and if you do not declare them, you are breaking the law. Paying an employee in cash and not declaring it to the IRS or payroll. Any form of illegal activity which you are benefiting from financially is evading tax, so even when dealing in drugs or any form of prostitution, you can still be taxed upon it if declared. Not reporting any income from an all-cash business. A real-life story of tax avoidance comes from the big tech company Google, who in 2016 was accused of using two loopholes which allowed them to pay just 6% in corporation tax instead of the required 19.3%. In the same year, Apple was ordered to pay $15.9 billion in back taxes after it was revealed that the company paid just 1% of the tax on its European profits. And there was much uproar from many politicians in the UK to boycott Amazon, when it was revealed they paid a measly £4.2 million in tax sales on £4.3 billion in profit. They did this by funneling payments made in the EU through its subsidiary based in Luxembourg. An American high-profile case for tax evasion comes from Republican Congressman Michael Grimm, who pleaded guilty to tax evasion through one of his restaurants. He admitted to evading tax to the total amount of $1 million by paying employees in cash and not declaring it. He was found guilty of this charge and was sentenced to 8 months in prison. So to recap, tax avoidance is the use of legal methods to reduce taxable income or tax owed. Tax evasion is the use of illegal methods of concealing income or information from the local tax authorities. Well, there you have it, the difference between tax avoidance and tax evasion. Please tell us in the comments section what tax avoidance or tax evasion means to you and why. Thank you for watching the video, and if you made it this far, don't forget to like and subscribe to watch more amazing videos.